All right. Good evening, traders. Welcome to the Sunday Open. I'm Craig Shapiro, macro strategist here at NinjaTrader Live. Futures are open. What do we got? S&P's up 35, NASDAQ up 170 handles, Russell up 15 handles. Bonds a little bit softer. The dollar, a little bit mixed. Crude up a touch. Gold down a scratch. Sunday evening gap up here. The government may open, which is exciting. We'll see. A lot of momentum in DC this weekend as, people are getting more and more frustrated with the government being closed. And it seems like we're getting closer and closer to at least some momentum to start getting a deal, maybe a vote, maybe even this evening in the Senate. We'll see if that happens. Have a great panel this evening. Pax is here, Sara is here, and Tammy is here. So welcome, guys. How's everybody doing this evening?
Hey, Craig. Doing good.
Fantastic.
I'm great, Craig.
Thank you. Pax, you were saying it may be storming in Chicago this evening, huh?
Yeah, sometime around midnight, we're expected to get 3 inches every hour until 5 in the morning. So anywhere between like 8 to 12 inches of snow, more in some places. So that'll be fun. Yet another reason to leave Illinois and another reason to leave Chicago besides all of the craziness and the taxes that you get for absolutely nothing and all the other crazy shit. It's time to get out of the city.
Well, there's plenty of space down for you here in Naples. Sara and I will welcome you with open arms. Tammy, where are you checking in from this evening?
I live on a little bitty island off the coast of Georgia. It's called St. Simon's Island.
I can't hear you.
You can't hear me?
Oh no!
Oh no! Can everyone else hear me?
we can hear you. We hear you good. Hear you good.
So St. Simon's Island's about an hour north of Jacksonville, Florida. So the weather's beautiful today. I actually posted a picture on X. I'm at Trader Tammy 1. We rode around in the Jeep with the doors off. So it was a great afternoon.
Nice. Well, look, it is Sunday, the Sunday Open, and so the idea here is to try to get a lay of the land for the upcoming week. Recap a little bit last week. Last week was a big week. We had the Treasury QRA announcement. We could talk a little bit about the funding needs for the government in the out years. We had the Supreme Court hearings last week and, some momentum on whether or not tariffs will be ruled constitutional or not. It seemed like the markets are moving in a direction where the odds are growing that tariffs will not be allowed to continue. So could talk about that. We have these government shutdown dynamics that seemed to be in play for the latter half of last week, and I think led to some of the weakness we saw in the tail end of the week, only to be reversed on Friday afternoon with some hopium for a deal this weekend, which has followed through here on the Sunday Open. S&P's up 33 handles, 50 basis points or so. So we're still not there yet on a government deal. We know we need to get to a deal. The Democrats are looking for some momentum on these ACA subsidies. Doesn't even look like that's going to happen, but a lot of back and forth in DC going on this evening, and will continue even if they vote to open the government. Even if the Senate votes tonight to pass a continuing resolution, the House still needs to come back next week at some point amidst all the travel delays and then vote on a similar bill. So we won't be out of the woods yet at all. So I don't know. It's a pretty action-packed week, but looking back, last week I felt like did a fair bit of damage to the tape. S&Ps were down close to 2%. NASDAQ I think was down 3 of the last 4 days, or even maybe 4 days in a row. But curious, Sara, how are you thinking about this week, the lead up, this gap up, and whether or not we are now smooth sailing into year end, or still have some work to do here?
All right, let us go to my charts. Here we go. First, before I even get into this week, I want to talk about last week first. So what we had last week was pretty much a simultaneous market break to the downside. And in the Strat world, we call that a 2 up, 2 down reversal, which is this image right here on the lower left, where we took out the previous week's low and targeted 2 weeks ago's low. So everything pretty much hit downside target the way we would have expected it to. So ES did it, took out that low. NQ did it, took out that low. RTY took out 1, 2 weekly lows. YM was the only one that did not take out a previous week's low. So it by default is stronger than the rest currently.
It's a waste of time.
Now, yeah. Did you say something, Craig?
No, I said that the YM is a waste of time for traders. There's no open interest. There's no volume.
Yeah, true. I just like it for simultaneous breaks so I can see what, everybody's doing.
Yeah.
I don't trade it either, but I do watch it. So with that being said, we had a big end of day rally on Friday because ES, NQ, and RTY all hit their downside exhaustion levels, and that's where we got simultaneous 60-minute reversals. So we shorted on the way down, and then we longed on the way back up once we hit our downside magnitudes. So it was pretty much textbook like Strat last week. So the question now, since we took out anybody who had a stop back here from, well, I guess it wasn't that long ago, October 22nd. Now the question is, do we go back up and through and hit all-time highs? Since we are nowhere near triggering a monthly reversal, we would like to see us go back through this range all the way to new all-time highs. And we call this a pivot machine gun, where we have lower high, lower high, lower high, lower high, lower high. So it should get up there fairly quick. And we've got the same thing happening starting out tonight as simultaneous breaks to the upside on the daily charts. So they're all above. NQ not quite above Friday's high, but it did get above. It's just not holding above right now. So that's what we would like to see. And then, yeah, then the new weekly reversals become a long above that, but we're trying to get long down here to get back up there. So that's for the 4 futures. Then let's look at Bitcoin. Bitcoin has made a lower low to this low back here. I'd really like for us to take this low out at 99,090 before coming back up. Ideally, doesn't have to. If we go above last week's high, that can also be a long back up to all-time highs. But in a perfect world, I'd like to see them take out these guys and then go up. Oil last week didn't do much. We were an inside week to the downside. It just didn't go anywhere. We've been stuck inside this mother bar or this weekly candle. This is going on the 3rd week now. So it's pretty much just kind of a tightening range, just not doing anything. Not a lot to say here. It's kind of stuck. If you go to a 2-week chart, you're going to see an inside candle, which that's the multiple inside week pattern that you're seeing on the weekly chart. Gold last week, gold and silver. Last week, we stayed an inside week. Pax and I were talking on the stream a while back about where people's stops were. So anybody who had been long gold riding the uptrend, they just got stopped out. Not last week, but the week before. And then we've been trading sideways since. So now we have an inside week. And since we stopped out the daily participants, we'd like to see them go inside week and up. And then target 1 would be here. Weekly target 2 would be a new all-time high. And then there would be daily targets in there as well, which we can, not many, grab real fast. Not many at all. So that looks good for gold. Again, silver, same thing. Silver stopped them out. And I say they stopped them out because they took out anybody who had been long since 10-2. And they did that right here. And then they've been trading sideways. So again, the equilibrium's trying to break to the upside. We're closer to going inside and up. So again, we would be targeting new all-time highs in the next coming weeks. And then the dollar, I don't trade it, but we've been charting this broadening formation since back here, and it hit its target last week. It hit its upside target. I know we've been at least talking about it since 10-12. And then we went inside week and up back here, hit the upside target. So now we would be closer to a downside reversal coming back through this range. So if you're going to be short the dollar, you need to break last week's lows. And that is all I've got to cover. If anybody has any questions on anything, you can type it in the chat and I'll answer it in the chat and let the other fine folks here talk about their charts.
Yeah, I mean, let's is that Tammy's, right? Let's kick it over to let's get over to Tammy. Tammy, curious kind of your framework here. How do you think about a gap up like we're seeing right now to open the week? Does it change kind of how you will prepare for the week or think about the week? And then just broadly, what are you seeing across the various asset classes that you follow closely?
Well, so I'm the Fibonacci princess. I was trained under the Fibonacci queen, who's been doing this over 40 years. And so basically what I was looking for this evening was for us to clear that 67, or either tomorrow, either way, 67, 64 to 69 area, but we did clear that on the open. So that is now, I'm going to delete that area now. Next area I'm looking for us to clear is anywhere from, let's see, 68.89 to 69.18, because we do have some symmetrical resistance. What I look at is previous swings in the market to tell me. So a lot of people use Fibonacci, but the Fibonacci that I use is a little bit more in depth and in detail. And I'm very grateful that Ninja has been working with me to make Fibonacci Princess tools. So that I can run the Fibonacci work on NinjaTrader platform the way that I do on another platform that I use. So I did have price support around that 66.50 to 55 area on Friday that we bounced from, but I don't feel like we're in the clear yet. We're back above the 50 simple, and we've been above the 200 simple, of course. But that blue 5 is still below the red 13, which means we're still vulnerable to the downside. Okay, so until I get all those moving averages back on the side of the bulls, I do feel like that we just need to we need to watch it here. And what I like to say is just take it from one decision to the next. That's what you have to do with price action, and you also need to look at different time frames and see what that's telling you. So that's what I have on ES at this point. If the low from Friday is in place and we're able to go through some of this overhead resistance, then the targets from Friday's low would be 70.34 and 71.38. But we'll have to see if Friday's low can hold in place. As far as NASDAQ futures are concerned, we did pop over some resistance that I was looking for us to pop over here, but it looks like we're still up against that 382 retracement on NASDAQ. So I would say that you still need to be a cautious bull here. A lot of times when I see us fail from a 382 retracement, it tells me that the move does want to keep going down. As far as symmetrical resistance on NQ, I do have one other area that I'm going to look at. That previous low to the October 30th high. That's going to come in around 26,303. So I'm going to want to see us get through this 26,037 to 26,303 area for us to continue to move up to the targets off of Friday's low. I did have price support on Friday's low, which was 24,705 to 16. As far as the YM is concerned, here again, we did on open tonight push through resistance that I was looking for us to push through. And actually on YM, I don't have symmetrical resistance anymore. So for me at this point, the path of least resistance would be for us to continue up to those targets, but there are no guarantees. We still do have the 5 below the 13, but at least we're above the 200 and we're above the 50. YM is actually not looking nearly as bad as ES and NQ are as far as the uphill battle. As far as RTY is concerned, we are testing that 50 SMA, and the 5 is way below the 13 here, so it's not looking quite as good to me. The next area of resistance that I'm looking for is 24.75 to 77, and if we can push through that, then the next area that I'm looking for us to push through, and I'm going to go ahead and type this in because these numbers are a little bit small. Let's see. 25.16 to 25.28. And here again, like I said, I look at previous swings in the market and highs and lows, and that's how I come up with the areas of support and resistance that I'm looking for here. So RTY definitely has the biggest uphill battle of the indices that I'm looking at. Gold is interesting, of course. The last couple of weeks, it hasn't been as interesting because we did finally find that price support and we've bounced, but it's really been a little bit more of some back and forth action here. So what I did on gold is I came down to a 30-minute chart so we could look at a little bit closer what we need to get through here. And right now what I'm looking at gold is I'm looking for us to push through 40.20 to 40.23 to continue this move up. Now, if we do fail from this, I do have a lot of areas of support you could look at for a buy. 39.91 to 93, 39.83 to 86, and 39.78 to 80. Now, those are several different clusters that you can look at. And so then you say to yourself, well, which one am I supposed to use? Well, what I like to say about my Fibonacci work is that it's one of the tools in my toolbox that I use to help me make decisions, but it's not the only tool that I use. So you definitely want to use other triggers or indicators to let you know if a zone is going to hold or not. But like what I said, I do consider it my hammer or my screwdriver. As far as crude is concerned, crude has all the moving averages on the side of the bears. And what I mean by that is we're below the 200 simple, we're below the 50 simple, and now the 5 has crossed back below the 13. For a while, the 5 was above the 13, and I was looking for lower time frame bullish setups, but we did come up to resistance on the daily and we failed. And now we've got even more resistance in our way. The next level that I'm looking at is 60.69 to 60.71, but we might not even get there because on the 30-minute chart, we need to be able to push through resistance on here first. And we're failing through that 382. So if you are wanting to get bullish on crude, I mean, it's a counter trend trade at this point on the 30 also, because the 8, I look at different moving averages on the 30-minute chart. I look at the 8 AMA and the 34 AMA. Now the moving averages are crossing over to the bears, so I would be looking for a short on the crude 30. But if you are wanting to buy crude, your setup zone is going to be 59.18 to 59 and it's changed to 0.70 since I did this text. But I will tell you, if we go through that 59.18, we will either retest the low from the November 6th, which was 58.83, or we will make a lower low. As far as the bonds are concerned, I do have price support here on the bonds, 116.093 to 116.312. If you are looking to get bullish on the bonds, we are still above the 200 SMA. So you can make a case for the bulls, but please be aware we're below the 50 SMA and the 5 has crossed below the 13. So the moving averages are on the side of the bears there.
Nice. Thank you. I think, when I look at the tape and we're 20 minutes in here, and just to recap where we are here, S&P's up 31 handles, NASDAQ up 165. Bonds are softer. ZB's down 14 ticks, dollar a touch stronger against the euro and against the yen, gold up a scratch, and Bitcoin up a scratch. It's an interesting setup here because, the indications are, I guess, from the equity market, there's more comfort that the government is going to reopen. And so you're seeing a decent move down in the VIX and volatility as well. And so there's some relief on the government open. But what exactly are we opening into, right? What does the economy look like with on the other side of this government shutdown? We know prior to the government shutdown, the economy away from AI CapEx had been slowing, right? The low-end consumer struggling, the lower part of the K-shaped economy softer, housing weaker, autos, restaurants, kind of across the board weakness. And then you throw on top of that 6 weeks of government shutdown, which led to various individuals not getting paid, and the anybody who has a contract with the government not getting paid. And so all the dynamics and follow on from that too. So any of the weakness in the real economy that was existing prior to September 30th now is exacerbated because of the 6-week shutdown. And it's just reopening the government up is not going to arrest a lot of that concern about the outlook. And so I think it's interesting here, the reaction we're getting from the bond market, right? I mean, bonds are a decently weak here, with that government shutdown. And I think that has to do with the idea that the Fed is, after the Fed meeting from a couple of weeks ago, really pushed back against the idea that another imminent rate cut was coming in December. Powell tried to actively move the rate cut odds from a virtual certainty to something less than a certainty because of worries about inflation remaining sticky. And, we've seen various Fed speakers throughout the last 10 days who have really pushed that narrative of, not really wanting to commit to another rate cut as soon as December. There's, I think, 13 or so Fed speakers this week. So we're going to hear a lot again from the Fed. But interestingly, even Steve Myron, who's, Trump's guy, the biggest dove on the Fed and had been dissenting twice, looking for 50 basis point rate cuts. Even he doesn't seem to be thinking that we need another 50 basis point rate cut. So you even have the most dovish members of the Fed maybe moving in a little bit of a hawkish direction, which I think is, something that the equity market is going to have to wrestle with between now and the end of the year. Because if we're not going to get that rate cut and we're not going to get a Fed that's looking to provide more accommodation imminently, then the macroeconomic slowdown and sluggishness that we've been seeing already is going to, is not going to be arrested. And so I think we're moving into a very, interesting period here. The seasonals obviously are good, particularly after a strong year that we've had so far. The Santa Claus rally, people are calling for it. And now that we've had this little shakeup here over the last couple of days, I suspect we're going to hear more and more folks who are looking for the liquidity to come in and take us right to new highs for the end of the year. But I don't know. And I think the jury is still out here. But Pax, curious your thoughts here overall, how you're thinking about the week, how you're thinking about the setup here with this gap up, and what are you looking for? I know last week, I think it was on Friday morning, I think we hit your quarterly pivot figure, kind of bounced right off that. I think, and we had a very aggressive move. I know we need closes below that to get more concerned. Obviously, we didn't get that on Friday, but how are you thinking about things here?
I'm watching the bonds. We talked about the bonds last Sunday night, and we talked about the primacy of the bonds and to keep our eye on the 30-year bond. And you know what? And Bitcoin, all that talk about Bitcoin. And if you remember where we were trading last Sunday night when we were talking about it, we were right here. So, all the beatings that people in Bitcoin took, and here we are Sunday, right back to where we started the entire week at. So the 30-year bond, I think, is something that we all have to pay attention to here. Let me pull up where we opened the week at last week. Was hold on one second. We opened at 117.28 last week. So 117.28, we're a full point below it, and we're below the quarterly pivot in the 30-year, which is 116.25. So I want to see that level I want to see 116.25 hold on the short side. And I want to see that level that Tammy was talking about, which I think was 116.13. And if we could get under there, then the 30-year bond is in trouble. And that's going to drag on equities. Because you guys have to remember, the lower bonds goes, it's inverted to rate. So the lower the 30-year bond goes in a rate cut cycle, is not exactly what the administration or the Fed is looking for. Because that means that rates are going higher. And rates going higher at the end of this year, I think is going to provide a strong headwind into this Santa Claus rally. There's very little volume tonight. The volume is not heavy. So it's making me think whether or not people are believing, that the government opening is going to be something positive for us. Last Monday, the opening range in Monday's S&P trade was very bearish. The reason is because the high of the day was the high of the opening range, was ultimately the high of the week, which was 69.09 and a half, I think. And we came out of the opening range pretty much on the first attempt, and we never looked back. So we opened up the week at 69.09. We traded, it took us 3 or 4 days, but we made it down to, Friday, as you mentioned, Craig, we made it down to the quarterly pivot at 66.58. and we held it and bounced. Why did we bounce? Did we bounce because there's positive news? Did we bounce because of, rumors of the Dems coming back to the table with the MAGA Republicans, and they're going to work together and hash out a deal? Okay, we're only 20 points away from Friday's high. So I don't know. I'm not seeing this gap up is something that is engendering a buy the market here, buy the S&P here. I don't know, maybe the Santa Claus rally just means that we don't break as deeply as the market breadth would suggest, and many other factors that we've talked about suggest. I don't know. So, kind of like what Sara and Tammy were both saying, we need to be nimble. We need to be, we need to be agile, right? We need to be as I showed last Monday in that the Ninja Cup, and then again in my stream on Friday, the way that I initiate my trades, I'm in and out. It works immediately or it doesn't. But when it works, as evidenced from Monday's trade going into the quarterly pivot on Friday, it works for hundreds of points. And all you have to do is look for spots to start to add to your positions. So 66.90, 66.58 held. Now we're back up to this level that we spoke about last Sunday night, which is 67.75 to 80. And, we're going to gap up, and maybe we open and fill it tomorrow. I don't know. But the gap fills, to be precise, the gap fills at 67.62 in the S&P, and in the NASDAQ at 25.220. 25.220. And I only want to see the gap fills during the trading day. I don't care about the gap fills at night. I only want to see it during the day.
Yeah. Interesting. I think when we spoke last week, we talked a bit about the government being shut, but didn't, really obsess about it, and didn't really feel like the government shutdown was moving the markets at all. Like, it just didn't seem like part of the narrative. It seemed like we had just come off the Fed meeting. We had come off the China trade talks. We had come out of the big cap tech earnings. And that was the story. The government shutdown really was not really being discussed. And so, as we pushed through the week, clearly there was, some concern, some narrative about the shutdown and the degree, and then the extension of the shutdown. How long was this going to last? But I don't know. To me, it's not that surprising that the resolution, a potential resolution is, not really being a powerful enough reason to gap us materially higher. It wasn't really part of the reason why we maybe were selling off at the beginning part of the week. So I don't know. I come back to this idea of what are we left with when the government opens, right? First of all, we're going to get data from the government once the government opens, which I think the data is going to reflect a reality that is not great. Away from the AI CapEx story, the underlying economy is not really doing incredibly well. I think even the administration would be first to admit that over the weekend. I think both Hassett and Besson both mentioned the potential for recessionary figures in the fourth quarter. They were blaming the government shutdown, but really the thing, was in play before that. And so, if we start to get that kind of data that comes out from the BLS, whether it's the labor data, we'll start getting weekly claims data. We'll get the September jobs report. We won't get an October jobs report because it wasn't collected, but we should at least get the September report, which is likely going to be a pretty bad one. And so I don't know if we start to get that reality of the data not being particularly good. I'm not sure what really takes us to, back to those all-time highs, particularly now that we have had some cracks in the Mag 7 stories, right? We have Meta, which has been really soft. Oracle, not necessarily Mag 7, but another AI hyperscaler CapEx name, filled the gap from early September that had gapped up on great numbers and great news. It's completely filled that gap. So you have two of the big AI hyperscaler CapEx names really starting to struggle here in the tape. And so what's the incremental news that's going to come out to take us back to all-time highs? NVIDIA, we get them, they report next week. Obviously, big, a big indicator there. But I don't know, Sara, how are you thinking about just I know you're less on the macro stuff, but just from a news flow perspective or catalysts coming up or things that you're looking at that may push your charts in one direction or the other? Are there different things that come up here in the next couple of weeks that have your attention?
Let's see. Well, we've got some earnings this week. Nothing too crazy.
And I think you got like Cisco maybe this week, and I think Applied Materials later this week. So kind of
Yeah, these guys. CoreWeave, that's been a popular one lately.
yeah.
BBAI, Oklo, RKLB, Circle. Nothing too big. And then if the government does open up, what do we got? We got CPI on Thursday.
Yeah, I think that you can't even really look at the calendar for the government data because the government they didn't collect any data in October. So trying to get any of that data is probably not going to happen. What we could get though is we could get the September payroll release, which was collected and was probably finished. And so we may get that piece of data, and then the government will start to collect the data again. We'll likely get weekly jobless claims. That probably be the first thing that maybe we start to get, probably not even this week, but we do get ADP now gives weekly jobless, basically weekly employment data. So we get that now starting every Tuesday. So that's going to be, I think, an interesting indicator. Although, yeah, even this, I think they'll do it this Tuesday. Tuesday's a holiday. I think it's Veterans Day. I think the bond market's closed on Tuesday. So, but we should still get,
you're right.
We should still get that data because I think the equity market is open. This week also from fixed income, we have bond auctions this week. We get 3s on Monday. I think we get 10s on Wednesday, 30s on Thursday. So a fair bit of bond supply coming, probably keeps overall pressure on fixed income through the week. So that's another thing to keep in mind. So, even though we're in the kind of a little bit more of a quiet macro period, and I mentioned all these Fed speakers, right? And while Powell's not speaking, just to hear the consistent drumbeat of what's happening and are they going to be cutting in December, I think is has the potential to be something that traders do focus on.
There is no doubt in my mind that we're it's going to be kind of a Captain Obvious thing. I think I've said this every time that we've done this show. I think that we are going to be a lot lower in a few months than where we are now. But I don't, that's my opinion, and I don't trade my opinion. I'm going to trade the market as it is, not as I think or want it to be. Now there's a little bit of a discussion about the government opening that will bring capital flows back into the market, and that will propel us into year end, which will take us back up to all-time high 69.53-ish, up to that level of 69.98, which I've been talking about over and over and over again. I'm sorry, 69.80. I'm dyslexic. I have to picture the numbers in my head. 69.80 is the ultimate goal of the S&P, and I still think that we can see that before we break, especially if the government does open. Now, as long as we're, and I think this is to the Tracy's point in the chat, as long as we're above 66.58, I might say it's a quarterly pivot. You guys will all have to take my word for it until you see how it's the quarterly fucking pivot. And we broke 300 points to it, and we rallied 100 points from it. So if I'm going to buy a break, if I'm going to reverse my position, that is the only spot, the quarterly pivots in any market, where I would consider reversing. So, I'm not a good reversal trader. By Friday, when we did hit it, I just covered shorts and I got out of the market. I didn't get long. But traders, I was just exhausted. The trading at this point in my life exhausts me. It doesn't give me energy like I used to. If I lost $200,000 in a day, man, I wanted the market to reopen. I would camp out in the pit and stand there until they reopened the market. And when I got to trade on the machine, it was the greatest thing in the world. Like 23 hours a day, 5 days a week, I could trade. This is the greatest thing in the world, until I tried to figure out how to make money on the screens, and then I stopped gambling. The whole idea, though, is the less we trade, the more money we're going to make. So I'm not a good reversal trader. If you are, you're looking to buy the dip down to 66.58. And until we take out that level and close below it twice, this is a buy the dip scenario, and not a dip buyer. I'm going to trade my opening range that protects me 100 times out of 100. It protects me 1,000 times out of 1,000. Period. That's it. I need to protect myself in every instance. But, tomorrow's opening range is going to be important. Don't fade it. Last week's open was the high of the week, the high of the day, the high of the opening range was all the same. It's super bearish. Tomorrow's a new day. Let's see what we're going to get. Let's see what we're going to get this week. I am, my thoughts align long-term with Craig. What have we rallied on since March of 2009? What have we this whole rally has been built on money creation and stimulus. Most of it, not all of it, but much of it. And artificial debt creation has been propping up these markets with financial repression, artificially low interest rates for 10 years, ZERP for 10 years, and just, every bit of stimulus in every, fashion form. So now what? I don't know. Does that mean that we can't see 7,800 in the S&P? Of course not. We can do that. Shit, I've missed bigger rallies, but I'll protect myself in every instance. And when the market gives me these big sweeping moves, like Sarah's outlining with the Strat, or Tammy's talking about, with the fibs, or whatever, when we get these big moves, man, we got to take advantage of them. Greatest business in the world. This is the greatest business that's ever been invented. The floor could have been a little bit better because, there was no place like that where people like us can go and compete with some of the richest and the smartest and the most talented people in the world and beat them. Whenever somebody would come in from Stanford with their business school degree and their dad's bag, I sat him right in front of me. I moved all of the neighborhood guys out. Let this smart asshole sit in front of me, and I'm going to send him back to his own man looking for another bag. And I would, and took pride in it too. Some street kid from the South Side is going to run the market around these kids. I'm getting goosebumps just thinking about it. I love that. This is the greatest business ever. And the screens, the great equalizer. It doesn't matter if I've got 100 million behind me or I got a $10,000 account. When the market opens, we're all on a level playing field. Every single one of us, whether you're a 2,000 lot trader or a 2-lot trader. The only trade that you've got to worry about is the next one. The only person you got to compete with is you. Find a process consistent, repeatable, and scalable. Let it protect you in every instance, and you'll catch these big moves. Sorry, I'm rattling on.
Yeah. I want to get to you, Tam, but real quick here, just another look at the tape here. And thanks everyone for being with us this evening in chat. Like and subscribe, please, as we try to grow our business here and our franchise here on the Sunday Open. But S&P's up 29.5, handles to 67.82 and change. NASDAQ 156. Bonds down 15 ticks. Gold up a scratch still. The dollar a little bit stronger. Bitcoin a little stronger. We're settling in here too. A little bit of a, we've had this gap up on some hope of the government reopening, but not a tremendous amount of follow through, really yet. We'll have to see how's the, is there a vote this evening? Is the House coming back into session next week? What's the momentum here? And there'll be headlines, throughout the week accordingly. I suspect the tape will become a little bit more jittery just if we get some of these votes and they either do or do not get passed the way people think. So kind of have to keep in mind that the regularity of this calendar and these votes can have, a little bit annoying, maybe some pajama trading going on. But Tammy, I'm curious from your process, how do you incorporate some of the macro data, the catalyst, the calendar, and just thinking about bringing that data into your trading philosophy and structuring your positions?
Well, to be honest with you, am I unmuted? I'm unmuted, right?
You're good. We hear you.
Okay. So I did hold a position through Amazon, but I'll be honest with you, a lot of times I don't hold positions through earnings anymore. I do remember the good old days of earnings where, somebody did well, then, the stock went up, but now there's just so many different factors that even if somebody beats earnings, the stock can still, turn against you. So I don't hold a lot of things through earnings personally, usually, unless it's maybe a stock that I've had for a long time at a much lower price. So I'm not worried about it pulling back. Usually with me, though, I just really make it, like I said earlier, I take it from one decision to the next. I'm looking at price action, and I'm looking at what my Fibonacci work tells me. I also am looking at moving averages. And now I am actually blessed and grateful to be in Pax's room. So I am learning from him now so much information that I never knew about before. So that is in addition to what I've always looked at. And I'm just really thankful for the great education that he's given to me now also. So really, to be honest with you, I'm not a huge, I'm not one of those people that knows a lot about economics. My husband's been in the industry over 37 years, so he knows a lot more about fundamentals. I really just look at price action and how things react more than worrying about what all's coming up and what might happen, because to me, a lot of it is the price action is leading it anyway.
Right. I thought Farm brought up a good point last week when he mentioned when I asked him a similar question about this, and he said, respect the price action. And when you get the catalyst, kind of see how the security reacts. Does it react the way it should react to the news, or is it reacting, anti the way it should with the news? And I think this, as we look at this gap up here with the talk of a government reopen, I think we're seeing kind of what I would have expected with respect to the government reopen, right? Equity is finding a little bit of a bid, vol getting hit nicely, bonds selling off, the dollar firming up a little bit because it had been modestly weaker into it. I do think it's interesting though, both gold and Bitcoin are seeing a touch of strength here. And I think that has a little bit to do with what happened last week with the elections. We didn't really talk a ton about the elections, the setup into the election, but I think the election result, did matter because it really was, a fair bit of an indictment against the first year of economic policy, from the administration. I mean, you had basically a modified blue sweep in New York, in Virginia, in New Jersey, and in California, where you had a big change in the way that they're going to gerrymander the districts, and Democrats likely to pick up an additional few seats there too. And so the odds that Democrats take back the House in 2026 moved up to, north of 70%. And so, look, the immediate reaction from the administration and from Trump specifically was populist policies, right? If he's talking over the weekend about $2,000 dividend checks back to citizens, he's talking about, the administration's talking about 50-year mortgages to help support the housing market. There's a big announcement about, reducing drug costs and bringing affordability down. And so but these populist policies, I think, are going to be, or at least, the headlines around them are going to be things that the administration are going to focus a lot on. And I think that's part of the, structural money printing story that's going to be with us for, the next year and really forever. The deficit spending dynamic and money debasement is a theme that's been with us, for a long time. It's accelerated, I think, this year, and something that is, as Trump looks to arrest polling declines and make sure that Republicans don't get smashed next year. I think we're going to see more of this rhetoric. Now, there's really nothing. Look, they can't even open the government right now, so to talk about dividend checks is a little bit premature. And these are budgetary decisions that are going to be very challenging. Even if we get the government reopened, it's likely only going to be reopened for another 3 months, probably through year end with the continuing resolution. And we're going to be dealing with this again in January, probably another government shutdown before they get a budget passed for fiscal 26. So unfortunately, we'll get a short reprieve maybe here through the holidays, but we're going to be dealing with this again next year. Maybe that's the time that we're talking about, much larger moves down in risk when, people realize that both sides are going to really dig in their heels for this next budget. So I don't know, but Sara, curious, as we're 45 minutes in here, anything jump out at you in the way the tape is trading this evening? Surprises? No, not surprised. How are you thinking about it?
Not a lot's going on right now. They kind of, if anything, it looks like they're about to head back up. Not too much movement here. I'm not looking to do anything. I do like the setup in gold. If we can get this 15 minute to trigger up above this line here. Gold and silver. I mean, these gold and silver look good for more up.
Oh yeah.
I added to some gold length last week. I feel like gold acts as a leading indicator on future liquidity that comes from whether it be the Fed or the administration. And I think the more that we get, concerns about the economy, concerns about the labor market, concerns about a slowdown, the more likely that we're going to get that Fed cutting cycle to happen in December, happen again next year. We know the Fed is going to end QT in December, and there's already talk about them being forced to expand the balance sheet, maybe as early as the first or end of the first quarter or second quarter of next year. So I think gold kind of anticipates that. And so after the blow off that we saw, it seems like it's digesting nicely here in time and in price. And I think, this will be a next, crucial couple of weeks here for it. I kind of like the gold long here too.
I do too. Gold's quarterly pivot is 39.83. And we churned it last week pretty well. The trade that I regret, or the trade that I missed, I don't care about the S&P at 66.58 missing that long. I do care about not being long gold at 39.83. That does bother me a little bit. I don't know that we'll get a chance to buy him there again. But I am sort of neutral-ish gold until we get another couple of closes above 39.80, and then that sets up another long back up to 4,400. And if we take out 4,400, man, we've got a whole nother leg up in gold, and we'll be cooking along, singing the song there. But yeah, I told somebody said Leo was cooking that gold trade. Yeah, Leo and Kane were talking about gold. I think on Friday morning. I think it was Friday. In their stream, and I said get long at 39.80. I said it in the chat. I don't know if they did or not, because I went back into my group and traded Friday's open. But anyway, it was a good long. And I don't know if I don't know if gold is setting up for another leg higher back up to 43.5, 44 even, or if it's just a back and forth trade. Last week I thought it was a back and forth trade until I saw that price action above 39.80, and I'm starting to think I missed the long. 47.22 in or maybe 47.26 in silver, just a couple pennies away.
Do you find that like these blow? I don't know. Some people would say gold's had a blow off, but whatever. Do you need to see a certain amount of time of digestion to get comfortable, or are you just looking for those levels, right?
I'm just looking for the levels. I'm not good with timing things. I've tried and I'm not good at it. So I still think that there was a great blow off top. That's why I am still a little bit reticent, a little bit reluctant to smoke him back in here at 39.80. But it's a trade. So look. Jimmy Cagnina and I were talking about 33, 30, 30, 33, 32, 33, 34. If you guys remember on Capital Preservation Fridays, going back into March and February, we kept talking about that level 33, 32, 33, 34. If we can get above that, we've got $1,000 in the trade. If we get below it, we'll be back down in the 26 handle pretty quickly. Well, we got above it. And we ended up reaching that target when we were in Naples at 44 even. And it was a great trade. But that's it. It was a great position and still long gold from my retirement accounts. But that was the trade. Now we need to let the other trades set up. And it might be in the beginning stages of it, 39.80 all the way back up. Yeah. And then, let's see I don't know. We're in the middle of no person's land. I'm going to, I have to be, I have to be all inclusive with Tammy and Sara, right? No person's land, not no man's land. No person's land. Anyway, 67, whatever. Yeah, thank you, Sara. 60. I can't hear you, Tammy. I had to listen to be able to hear you. I had to jump over into YouTube because for some reason I can't hear you. 67, no. 62 is the gap. 67, 79, 80, was a level that I was just it was a series of old highs, old lows that we broke out from that I was looking at. And then 67.94 is a macro zone in the S&P. If we can get above 67.94 tomorrow early, and that matches up with like a 15 handle rotation or the opening range, then I'll aggressively be a buyer. And I'm not a big fan of being long. I like being short more than I like being long. But I'll get long. Hold my breath.
Tammy, Tammy, any further thoughts on gold before we jump over?
Oh yeah. Actually, I do have a level of support on gold. 60. I just typed it in there. 4,009 to 12 is a price support that I have on the 30-minute chart that I'm looking to hold, or we could test that previous low, or make a lower low, just a smaller lower low. I mean, that previous low was 4,004. So that if people are trading gold, that is what I'm looking to hold. But the problem is that we're right up against my cluster of resistance also, which is 40, 20 to 23. And that's what we're failing off of right now. So I don't really like it when I feel like I'm trying to thread a needle. I like to try to see if something is going to show me more of a direction and give me more clarity. And I have to say that is one thing that, PAX has helped me with, is clarity. You need to realize when it's not worth trading and when you need to be able to walk away. And you also need to realize that you will save yourself a lot of money if you don't trade too much. Take the good trades, take the things where you have a lot of clarity, where you really know where, if it goes past this, I'm out. Or if it comes to this level, I'm in. But, just sitting there staring at the screens all day, waiting for something to happen, that's not the way to go. Another bus will come along. Don't have the FOMO. I mean, it's funny because I've been in a lot of trading rooms, not only as an educator, but also as, someone who's watched a lot of different people. And I have to say that's one thing that Pax and I immediately had in common when I did join his room, is that I am not afraid to miss a trade. That is not something that bothers me at all. It's not something that I sit there and go, oh my gosh, I can't believe I missed that. Oh, I'm so upset I missed it. Like, another trade will come along. They come along, but don't sit there and just trade just to trade. You need to know what you're doing, or you're going to not make it in this business.
No, it makes sense. I think that, we've talked on the morning show, for weeks about the strength of the gold market and the reasons behind it, and whether it was the fiat debasement, government shifting away from treasuries, just a variety of reasons to be long, structured long gold, kind of the best, bull trend that we had all year. And but when we kind of got into that blow off zone there, and you can see the volume really accelerate through the middle of October. And now we're trading the digestion period here, right? I mean, the narrative is still very good, but I think we have to just, buy some time. I like the idea of kind of just, not feeling like you have to be involved from a trading perspective, right? I think the structural reasons to be long gold are still there, but until we get, I think some, what's the next catalyst to come in here? Is it something with respect to the slowdown that's observed in the data from the government being opened? It's possible that the data will be better than expected too, and the Fed will not be needing to cut, and the AI capex story will reaccelerate in the coming weeks and months, and the dollar will rally, and gold will find its next leg lower here. It's still a very reasonable probability here that is that happens as well. And so I like to watch it here, buy some time, kind of consolidate here at this higher range. Look, if you look back, looking at the chart, gold was basically range bound from May through September, right? It was just 4 months of chop, just back and forth between the, 35 and change to 3,300, right? Just kind of sat there, buying time. And so, the fundamentals seem good, but without a catalyst, without really a reason here, as gold volatility now has been correcting. And that was another good sign of the exhaustion, was when gold vol was moving higher, with gold price moving higher there in that second week of October. As more and more upside calls were being chased. So as gold vol starts to get hit and digest and buy time, there'll be another trade there. But for me right now, I kind of like gold, but I don't really doesn't seem like there's an imminent rush until we start to see more of that economic data come out and confirm that the slowdown is upon us and likely getting worse. So,
to Tammy's point about, and thank you for the kind words, Tammy. Really, I couldn't be, at this point in my life and this point in my career, I couldn't be more excited to be with you and to be with all of you tonight. But with the group of traders that I get to be with every day, and that's life-giving. So anyway, if I've got a superpower as a trader, and it hasn't been the case my whole life, but if I've got a superpower as a trader, it is the ability to miss moves and to not care, to not be emotionally tied to it. I wonder if that is easier for my oldest daughter. Genevieve would clobber me if she heard me say this, because you can't, Dad, you can't say things like that. But I wonder if it's easier for women to than it is for men to be able to miss trades, and to not be emotionally tied to it. I think it's more natural for me, at least, to want to fight my way back into the trade. I want to battle my way back into the trade, and I chop myself up. Meanwhile, the trade's working, and I chop myself up trying to get in. Or I buy them and I pitch them 15 points later, and then they go 30, 40, 60, 80 points. I can hurt myself doing that kind of thing. It took me a long time to learn how to focus more precisely on my my process than my emotions, and that's that. I had to go broke to learn that, and that's not easy. And I wonder, there's a reason why the best women that I've ever known, independent traders, the best independent traders are women, all of them. Margie Teller, if you guys have never heard of Margie Teller, go do your homework. She was the biggest independent trader in the history of independent traders. Nobody will equal her. Huge, 5'3", 5'4", little blonde lady, a mountain of a trader. Julie Vukin, huge. Linda Raschke, down and down the line they go. Anyway, the point is that we need to focus more on our process, and less on our emotions, and less on our ego, and more on what the market is telling you. And when the market lines up, like Sarah's talking about earlier, and like Tammy's talking about now, when the market lines up, and we talked about last week, Craig, when the market lines up, when you get positioned and the price action dictates the technicals, and the technicals dictate the fundamentals, or whatever way you want, you get positioned first, the fundamentals dictate the technicals. Those are huge trades. You've got clarity. Look to add to your positions. That's how you're going to get rich. You're going to get rich by learning how to add to your profitable trades, not adding to a loss. Don't ever add to a loss unless you're an investor. Then, of course, you're going to dollar cost average. But if you're a trader, don't add to a loss. Learn to add to profit. There's going to be huge trades in your future. You just have to be here for them. Don't snatch defeat out of the jaws of victory.
Yep, makes sense. Well, we're coming up on the hour here. Sara, last word to you here before we kick it off for the weekend.
Just gonna see where we open tomorrow, and I am paper trading as we speak. Just gonna see where we open, and just play it day by day and do what we do, and see if we have full time frame continuity and play in the direction of the overall trend, basically. And since we're going to open inside last week's range, things can kind of bounce around a lot. So can't really be married to any kind of bias right now.
Hey, Sara, you said something. I meant to. You said something in the Monday Ninja Cup that I thought was incredibly interesting.
What?
All day long, you just kept saying, I admired what you did that day, by the way, a great deal.
Oh, I just said fuck it because it was an
no
inside
setup.
day, and
Right. And then you said that Tuesday we were going to break out of that range. Remember we had that huge Friday candle. I forget how big the range was. I can look at a chart, I suppose, like everybody else. But we had and we were inside, and you said we are going to extend the range Tuesday. And I thought, really? And we did. It was a great trade. And you sat there Monday and showed everybody how to be patient and don't force things, and just wait for your setup. And if you don't have a setup, let it go. And then boom, Tuesday it hit.
Yeah.
That's it. Sorry.
Yeah, the thing about the Arena Cup is you never know what kind of trading day you're going to get. We had 3 of them, and 2 of them, the traders got stuck with inside days. So it really kind of sucks and didn't get to like show what we can really do. It just, it's part of the competition. So we all just did our best. Oh, we got a flip coming.
Very good. Well, last look here. Minis are up 28 handles. NASDAQ up 160. ZB's down 15 ticks. Gold up a scratch. Oil up a scratch. Kind of a quiet hour after the gap up from the hopium trade on the government maybe opening this week and giving us macro strategists some things to do for a change. But thanks again for everybody joining us in chat this evening. Thanks to Tammy and to Sara and to Pax for taking some time on Sunday night. Appreciate everybody being here. This was the Sunday Open, and look forward to seeing you all tomorrow morning with Deli and Chai for the morning report at 8 o'clock tomorrow. So thanks again, guys. Appreciate it.
All right.
Thank
Have
you.
a
Thank
good
you
week,
for having us.
everybody.
Thank you.
you.
Have
Trade
a
'em
great
all.
evening, everybody. Please come see us again. Thank you for coming to see us this evening.